trading around a 9 to 5 schedule presents a unique challenge. You're not in the market full-time, but the charts keep moving, news keeps coming, and other traders with more flexibility are constantly reacting to every tick. When you first sit down in front of your screen after work, you might feel pressure to make up for lost time or catch a move that already happened. That pressure isn't just psychological. It can have tangible consequences for your trading results. Your attention is limited, your energy is lower than during peak hours, and your decision-making capacity is reduced compared to a morning session when you're fresh and alert. Choosing the wrong time frame as a part-time trader magnifies these challenges. Shorter time frames, like 1-minute or 5-minute charts, demand constant attention, rapid reactions, and split-second decision-making. They amplify stress, increase the likelihood of impulsive trades, and make adherence to risk management more difficult. When you're trying to balance a full workday, family obligations, and a trading routine, this cognitive load can quickly lead to mistakes, overtrading, and emotional burnout. Longer time frames, like 1-hour or 4-hour charts, offer a different type of challenge. They require patience, discipline, and the ability to sit through periods where nothing happens. For part-time traders, these charts align better with limited windows of availability, allowing you to focus on the setup rather than reacting to every minor fluctuation. They also provide a clearer perspective on market structure, trend direction, and key support and resistance levels, which supports more objective decision-making. Consider the nature of your 9 to 5 job. If your day is mentally exhausting, your brain is more likely to seek dopamine hits from action-packed charts. The temptation to trade on lower time frames can feel irresistible, even when it's inconsistent with your trading plan. This is where discipline comes in. Understanding the physiological and psychological pressure you're under allows you to match the right time frame to your available energy. Otherwise, you're essentially asking a tired mind to perform under conditions that favor impulsivity. A practical example helps illustrate this. Imagine a trader who finishes a long day at the office and opens a 5-minute chart for euro to US dollar. Within the first 15 minutes, the price swings have triggered multiple false signals. The trader reacts emotionally, entering trades without proper confirmation, adjusting stop losses, and over-leveraging in an attempt to capture every move. By the end of the session, the account shows a series of small losses that compound into a significant drawdown. None of this is due to market unpredictability. It's a direct result of a mismatch between time frame, energy level, and cognitive capacity. Now contrast that with a trader who uses 1-hour charts in the same situation. They focus on identifying 1 or 2 high-probability setups during their limited trading window. Their attention is concentrated, their decisions deliberate, and their risk management is easier to execute. They may only take 1 trade in the evening, but the quality of that trade is higher, the stress is lower, and the odds of consistent results improve significantly. For part-time traders, quality always outweighs quantity. It's also important to consider the impact of news events and volatility. Low time frames amplify short-term noise, making it difficult to distinguish between meaningful price action and random fluctuations. Higher time frames filter this noise, helping part-time traders make decisions based on trends rather than reacting to every spike. Recognizing this difference is critical because it affects not only the number of trades you take but also the consistency of your strategy over time. Mapping your trading window to your natural energy cycles can optimize the effectiveness of the chosen time frame. Some part-time traders are sharper in the morning before work, others after dinner, and some may need to reserve weekends for longer trades. The key is to identify your peak mental periods and align them with time frames that allow you to trade methodically. The wrong combination leads to fatigue-driven mistakes, while the right combination strengthens discipline, confidence, and long-term profitability. Trading success is directly linked to your energy and focus, yet many part-time traders overlook this connection. When you step away from your 9 to 5 job and sit in front of your charts, your mental state is already influenced by hours of cognitive effort, meetings, emails, and problem solving. The human brain is not designed to maintain peak decision-making for extended periods without rest. Cortisol levels rise during prolonged stress, your prefrontal cortex function diminishes, and your ability to regulate impulses decreases. These physiological realities shape which timeframes you should focus on and how you execute your trades. Understanding your energy cycles is essential. Circadian rhythms dictate natural peaks and troughs in alertness throughout the day. Some traders feel sharp and analytical in the early morning, others after lunch, and some after winding down from work. Mapping your natural highs allows you to select timeframes where your cognitive resources are strongest. A 1-hour or 4-hour chart may require more patience but aligns better with periods of sustained focus, while shorter timeframes demand split-second reactions that can exhaust an already depleted mind. Situational triggers also play a role. A stressful commute, unresolved work tasks, or household responsibilities all sap mental bandwidth. When you attempt to trade immediately after these experiences, your brain struggles to maintain discipline. Emotional triggers like frustration, impatience, or guilt over missed opportunities compound the challenge. Many part-time traders enter trades impulsively during these windows, believing they can catch up on lost time. In reality, this behavior increases the likelihood of errors, deviating from your trading plan and accumulating small but costly mistakes. One practical tool is to track your energy and mental state alongside your trades. Journaling your performance should go beyond entries, exits, and results. Include notes about fatigue levels, emotional state, distractions, and any situational stressors. Over time, patterns emerge, showing which timeframes are most compatible with your cognitive peaks and which conditions consistently lead to suboptimal trades. This data transforms subjective feelings into objective insight, allowing you to make informed choices about session timing and chart selection. Let's consider the mechanics of trading during limited availability. Suppose your primary window is the hour after work. Attempting to scalp 5-minute charts may seem appealing because you feel urgent to act quickly. The reality is that your focus is fragmented, and every minor market movement triggers an emotional response. Mistakes accumulate, and risk management becomes secondary. Conversely, using a 1-hour chart allows you to zoom out, wait for clean, high-probability setups, and execute trades with calm precision. You reduce the number of impulsive entries and increase the likelihood of following your rules consistently. It's also important to recognize how external pressures affect time-based decisions. Family responsibilities, evening obligations, and work deadlines all compete with trading. When these pressures intersect with fast-moving charts, the risk of cognitive overload spikes. By consciously selecting timeframes that allow you to trade deliberately, you protect both your capital and your mental clarity. Quality setups executed with focus are far more valuable than a dozen rush trades taken simply because time is limited. Another layer to consider is the effect of market volatility on different timeframes. Lower timeframes exaggerate short-term noise, making small fluctuations appear significant. Without the bandwidth to process these fluctuations objectively, part-time traders may act prematurely, chasing minor swings and violating stop-loss rules. Higher timeframes filter this noise, allowing you to respond to real trends rather than reacting emotionally to transient spikes. Aligning your chosen timeframe with both your energy level and the market's natural rhythm reduces cognitive stress and enhances long-term consistency. Adopting situational awareness requires an intentional approach. Before each session, take stock of your mental, emotional, and physical state. Are you tired from work? Distracted by personal obligations? Mentally drained from problem-solving tasks? These factors should inform your decision about which timeframes to focus on and whether trading that day is prudent. Part-time traders who integrate this self-assessment into their routine consistently outperform those who blindly react to charts without accounting for their current capacity to trade effectively. Transitioning from your 9 to 5 responsibilities into a productive trading session requires more than opening your charts. It demands rituals and structure that reset your mental state, protect your focus, and ensure every trade aligns with your plan. Without these steps, fatigue from work spills into your trading decisions, increasing the likelihood of impulsive entries, overtrading, and rule violations. Reset rituals begin with intentional pauses. Even a 5 or 10-minute break after work can be transformative. Step away from screens, stretch, or practice deep breathing exercises. A short walk or a few minutes of light exercise increases blood flow, reduces cortisol, and signals to your brain that the workday is complete. This mental separation is crucial. Entering the market with lingering stress from meetings or deadlines makes it difficult to evaluate setups objectively, and even the cleanest trading strategy can falter under emotional pressure. Journaling is another cornerstone of sustainable sessions. Before you trade, note your current energy levels, emotional state, and any external distractions. Record why you are entering a trade, which time frame you are using, and what your risk-reward rationale is. This process not only reinforces discipline but also trains your brain to operate systematically, reducing the influence of fatigue-driven impulses. Post-trade, document outcomes and any deviations from your plan. Over time, these entries reveal patterns and provide actionable insight for adjusting timeframes and session structures. Structural rules act as guardrails during your trading window. Setting a maximum number of trades per session is a practical safeguard against overtrading, especially when your cognitive resources are limited. Strict stop-loss adherence protects both capital and emotional stability, preventing a small loss from cascading into a destructive sequence of revenge trades. Pre-trade checklists ensure that each trade meets your strategy criteria and that emotional impulses are checked before execution. Time management within trading sessions emphasizes quality over quantity. A part-time trader with limited hours benefits more from waiting for high-probability setups than attempting to chase multiple lower-probability trades. For example, using a 1-hour chart after work allows you to identify setups that align with trend direction, support and resistance levels, and market context. You may only find 1 or 2 trades that meet your criteria, but each trade has a higher expected value than several impulsive entries on lower timeframes. Practical session design can be condensed into a 30 to 60-minute routine. Begin with a brief reset, followed by market analysis focusing on the pre-selected timeframe. Highlight potential setups and define risk parameters. Once trades are executed, monitor positions with patience, adhering strictly to your stop-loss and take-profit rules. Conclude the session with journaling, noting not just trade results but your focus, emotional state, and situational context. This routine trains your brain to transition effectively from work mode to trader mode, reducing the impact of decision fatigue and increasing consistency. Environment also contributes to sustainability. A quiet, dedicated trading space reduces distractions and reinforces focus. Adjust lighting to avoid strain, minimize background noise, and ensure your charts and tools are organized for clarity. Small environmental adjustments amplify your ability to maintain discipline during high-focus sessions. Timeframes should always reflect the reality of your availability. Shorter timeframes may seem tempting because they promise more action, but they also demand rapid decisions and constant monitoring, which quickly exhausts your mental energy. Longer timeframes, like 1-hour or 4-hour charts, allow deliberate analysis and reduce the emotional swings triggered by minor price movements. Aligning timeframes with both your energy cycles and session length improves decision quality, preserves mental bandwidth, and protects your account from fatigue-driven mistakes. A final key element is intentional alignment with cognitive peaks. Review your natural alertness throughout the day and schedule trading sessions during periods when your decision-making is strongest. Even a small adjustment, trading just an hour earlier or later based on when you feel most focused, can dramatically improve execution quality. This ensures that every trade is approached with clarity rather than desperation, and that your part-time trading is both disciplined and profitable. Sustainable trading for part-time traders is not just about selecting the right time frame or session length. It is about creating systems that protect your energy, maintain focus, and prevent burnout over months and years. Treat your mental and physical state as part of your trading toolkit. Every decision, every reaction, and every trade is affected by your overall well-being. Sleep is non-negotiable. Trading after work requires you to recognize that your cognitive performance is finite. When you compromise rest, your prefrontal cortex, the part of the brain responsible for rational decision-making, impulse control, and pattern recognition, is impaired. Insufficient sleep amplifies emotional reactivity, increases cortisol, and makes it harder to follow rules and manage risk. Establish a consistent sleep schedule, even if it requires limiting late-night sessions, and your trading quality will benefit directly. Nutrition and hydration also play a crucial role. Stable blood sugar supports focus and emotional control. Skipping meals or relying on caffeine alone can create spikes and crashes that impair decision-making. Simple adjustments like a balanced meal before a session and water within reach enhance alertness and reduce fatigue-driven mistakes. Over time, these small changes compound, improving both mental clarity and trading consistency. Exercise, even in short daily increments, improves cognitive function, reduces stress, and helps regulate emotions. A 15 to 20-minute routine after work or before trading serves as both a reset and an energy booster. This physical transition from work mode to trader mode helps signal to your brain that it is time to focus, and it lowers the likelihood of impulsive decisions fueled by residual workday stress. Workspace setup is another overlooked factor. Organizing your trading environment, reducing distractions, and ensuring comfortable ergonomics improves concentration and reduces the mental load associated with multitasking. Part-time traders must maximize focus during limited hours, and a structured environment acts as a silent partner in maintaining discipline. Accountability mechanisms provide an external layer of discipline. Maintaining a trading journal is the foundation, but incorporating mentorship, trading partners, or peer review amplifies results. Sharing your pre-trade plan, reviewing trades, and discussing patterns with someone else introduces perspective, reduces self-deception, and reinforces adherence to rules. Accountability is particularly valuable when trading outside of normal working hours, because your mind may rationalize deviations if left unchecked. Routine reinforcement is essential for long-term consistency. Pre-trade checklists, strict stop-loss adherence, and session limits should become automatic. Willpower is finite, but procedural discipline ensures execution does not rely solely on mental strength, which is often depleted after a 9-to-5 job. Habits built around energy management, focus, and procedural adherence create a resilient framework that supports trading longevity. In addition, cultivate awareness of emotional and cognitive triggers. Fatigue, frustration from work, or minor life stressors can distort risk perception and increase the likelihood of impulsive trades. Developing mindfulness and reflective practices helps you notice these states before they influence execution. Techniques such as short meditation sessions, breathing exercises, or brief journaling before trading act as mental resets, keeping decisions rational rather than reactive. Strategic alignment of trading sessions with energy peaks, rather than rigid clock times, further enhances consistency. Identify when you are most alert after work and plan trading during those windows. This could mean adjusting lunch breaks, early departures, or evening session durations. Aligning with natural cognitive performance preserves decision-making quality, even when your hours are limited. Finally, recognize that trading part-time is a marathon, not a sprint. Short-term profits are secondary to building sustainable habits, energy management, and disciplined execution. Trade in alignment with your energy, protect your mental and physical health, and focus on the process, not outcomes. Over time, these consistent, high-quality decisions compound, producing results far superior to reactive, impulsive, or fatigue-driven trading. Mastering these practices separates successful part-time traders from those who burn out, chase setups, or abandon trading entirely. Consistency, discipline, and energy management form the foundation for long-term success, allowing you to grow trading skill and profitability while maintaining a healthy balance with your 9-to-5 career.